Next 24 hours are going to be extremely crucial for the global financial markets as the Pentagon has sent a notice of ground invasion into Iran. So the Pentagon is preparing for weeks long invasion into Iran and have sent their troops through the Strait of Hormuz. And if you think that this is a one-off hit, you're completely wrong. Because this is not a one-off hit. When operations like this start to begin and when a conflict stops from being to a headline to sustained operation, markets tend to stop pricing the shock and start pricing in duration, which is even more dangerous. Now there are only three ways that this can go on forward. First scenario is that Monday brings the action, oil spikes, but the markets stabilize when they realize that it is not a sustained operation. The second scenario will be that uncertainty tries to hit inflation, shipping routes, oil prices, military operations as the operation starts going on and continues further. The worst scenario would be that markets start pricing in the damage to Iran's export system and the whole global macroeconomic picture is going to change within a flash. Now the heart of Iran's oil exports lies in the Kurg Island, which handles over 90% of Iranian oil traffic, and Reuters says that it is shipping around 1.55 million barrels a day. At the price of 112 for the Brent crude, that is $174 million a day, $1.2 billion in a week, and more than $63 billion every single year. So why Monday is so important? Well, this is the first opening day of the market after the ground invasions have begun. And if the markets start to factor in a sustained long operation, then oil will not just move a little, it can jump really hard. And that can result into a full cost shock because when oil rises at such a rapid pace, along with uncertainty, it includes higher power cost, higher shipping cost, higher transportation cost, uncertainty, and higher inflation all at once, which can result into higher interest rates, which can also result into a stronger dollar, sustained foreign institutional investor flows, tighter liquidity, and that is not bullish for any country or any market which needs cheap energy and sustained money flow to sustain their markets and to grow further. Case in point, Indian markets. Now, the next few days are very crucial because it will tell you if this can still end with a shorter shock or whether if it's a real regime change in oil, inflation, and the global financial markets. Be prepared.